Okay, welcome everyone. We'll start our lesson 3. Today lesson is about LO3, understand internal and external factors that affect organization. So internal is within our organization and external, those are outside organization. We can discuss as many things because indicative contents is given. Internal is a micro environment, external is a macro environment, which is we can't control it. We have to adjust our operations accordingly. So that will go through today. Really is what we're supposed to be learn. Understand internal, external factors, different kinds of control. We can look around behavior, social output. We can look around the financial control, which we discussed the variance in the past. We can relate our discussion, advantages or disadvantages of different control can be. Internal control function will help, organization structure. We can look around and rectify it if we need to be clear role and responsibility. External factor, of course, taxes, interest rate, these are all given in our indicative content that will be in our discussion. Okay. First, 3.1, we supposed to discuss internal and external. So as we couple of you already learn about another subject area, it's called PEST, political, economic, social, and technological factors. Every organization faces two types of environment. One is called macro, which is uncontrollable, and second is micro, which is internal and controllable. So that's so the COVID-19 is not our control as an organization. So what we have to, COVID-19 impact our performance. We have to adjust our operation according to external environment, what is happening outside. So when we look this microeconomics environment, we can look around political factors, political stability. When we look the labor and conservative, two different, political ideology. One is maybe borrowing more and spending more, and they're thinking, oh, economics activity will boost, and at the end of the day, of course, if the employment and things increase. But in other hand, conservative initial policy was, yes, reduce the budget deficit, but now is again, of course, borrowing a lot due to the economics and the COVID-19, and of course, all these slow economy to boost again. So we can look around two policies. So whichever industry we are in, like in many industry, the government apprenticeship scheme for suppose grants. So maybe we can look around what benefit as an organization we have those. So you can think about your own organization. What you think, and is there any benefit you think, or any funds which your organization, wherever you work, anything, any government policy?
Wait a minute. Sorry, I didn't understand the question.
I mean, a government recent policy will be beneficial for your organization. Any policy which you think?
What, for external or internal?
Oh, of course, government policy will be external. Yes. So what do you think? Like any tax or any furlough scheme or any other scheme which is beneficial as your organization?
Well,
there can be many. Yes. Which industry you work for? Suppose you work in accounts, or you work in? You working as an accountant? Are you working for someone? You working for your own? Okay. So let's say, if it's a Morrison, for suppose, yes. If the government started apprenticeship scheme, for suppose, yes. So you can staff your staff by using the tax levy that's being introduced. Like if whatever the payroll we have, the taxes we pay. some percentage we can use toward the staff development from the government portal. We can get the fund. So this is the policy will help our organization. This external factor will affect our organization. Yes. Corporation tax, for suppose, yes, CT, if it increase due to the government policy, this will affect us. Yes, government COVID-19 restriction affect us. So we can think about, as my organization where I'm working, I'm in our education sector. So what government policy, like funding towards school, yes, will affect, or cutting the funding from school or toward the education sector. So that's, we can look around, and thus we can make our policies internally keeping in view of external. External, we can't control it, we can't influence, but internally we can. Yes, we can adjust our operation accordingly as per external. Is it logical? Make sense? Any question you think?
Yeah, it does make sense now. Yes.
Okay, so we can look at
logistics now.
Yes. So economics, inflation rate, how much is? Do we know approximately inflation now we have?
Is it 2.1?
2.1. Well done. That's quite, this recent information 2.1 inflation. So inflation will affect us as an organization. Yes. Maybe
Yes.
if we are selling our own personal budget, everything affect. So what we need to do, we need to make internal policies to reduce our cost to address the inflation factor. Our budget need to be increased by at least 2.1%, keeping in view of the inflation. Next, if we are buying anything from abroad, exchange rate can be huge, especially now. Of course, if we are outside Brexit, what will affect will be on and the costly process, economics activity, economics growth, taxation, unemployment. Unemployment rate is slightly increased. It was dropped to 4.5. No, is I think so. Is a 5.5 something, or maybe 6, 7 now. So because it's went up, it's of course carry on changing. If we want to find some information on these, maybe we can go on the website. It's called ONS, Office of National Statistics.gov.uk, and we can find information each sector. Social factor, of course, society is changing. The way we used to work is changing. So we need to be look around our internal, like flexible working hours, and they're working from home. COVID-19, yes. So our internal policy should be in line with the external social factors. Okay, technology, fast changing through 3G, 5G, yes, mobile technology, especially now digital taxation, digitalize, HMRC. So we need to be look around. Though this is all come. So I included some slide here, like suggested the business environment may be visualized in terms of the layers, and considering both internal external factors surrounding the business that can influence, which we just discuss, or the regional and other. Okay, we have one case study which we can read in our own time, which is called First Bus, how they respond to external environment, what policies they make. So that's is good to be, we can get the idea about more how we can respond to external. Yes, they enter into different
Okay, yeah.
different decision based on these. Okay, that will go well as well. Okay, then next, business environment can be a physical place or the location. For example, shopping mall where maybe businesses are in close competition with the other retailer. Like the concept is changing, like food street where all sort of food under one roof. So that's these are the concept. As the business environment change, we have to think about how we can change our the operation, and various chartered institute and various research happen is carry on happening because the environmental factor is not constant, though the rap change. So we have to change ourselves, our policies, our procedures. So this again, we can look around, special analysis, we can reflect. So business environment. So here is, we have a link here, we can copy and paste if you want to look around further crazy slides as well. We have a link for further exploring about the business environment, and all being summarized here in the next slide. When we're looking political membership of WTO, first suppose that can also government tries to control the inflation, what policies they have, create the opportunity for SMEs, small medium enterprise, and international banking transparencies. Then economics environment, we can look around fewer workers, create wealth, need to be spreading, of course, based on the external inflation rate. Social factors, more services for older people, are more investment in the younger. That's keeping in view of social factor. Government can technology, social media is very powerful, and how effectively we can use as an organization. What message we can give on the social media? Do we have a social media cell in our organization or department? Do we have someone expert those are social media to use to create the business opportunity for us? Because that's external environment, and we need to internally make the decision. Different changes happen in different countries based on the question, and different government can make decision. Next, we have 3.2, where we can uh, collect different information from different source, and we can produce the cost report. Okay, so different source of information: internal management accounts, internal reports. We discussed management accounts and the financial accounting. Management is the internal, financial is the external. So financial is balance sheet and all. Management account report like budgeting, flex, fix, those we discuss in. We can prepare the cost reports based on, is it unit cost, what is happening. We discussed the high-low method last, the previous lesson. We can embed costing methods. We can think about, we discuss about job costing. Is the cost unit that the consist of single order of the contract, and we can look around the contract, what is are the costs and what are the return of that job. Okay, job costing can be, then we have a batch costing. We can, how many batches we are buying, what is the total units in it, and what will be the cost per unit of the batch. So we can make the decision what price we will charge based on the costing. Okay, service costing is very popular as well, like NHS and various other organizations. They have to look around the service they provide, what cost them, because their purpose is not earning maybe profit like NHS, but they want to be look around the value for money. Where NHS is spending, like they back in 2012, the IT system failed and the government spent the millions in the IT system. There was not embedded, the application of uh, where the people can book the appointments even online, but order medicine. So these are the issues. These we need to look around the cost and the value of it, and that's more about the service costing and the customer satisfaction level. What's happened, it how the service and the time and the convenience we have, so we can look around all in costing. So what we can then next we have is a process costing. Each process of the product, because product is not making in one, they have many steps involved, and this is called the process costing, which we can use. Okay, under process costing we have a normal loss we are expecting that can be 10% time can be waste. Yes, if it's a more than waste, that time it can be abnormal loss. Normal loss we can observe into the product pricing, and abnormal gain, we have a gain, because if we don't have a loss, if we're saying 10% time was supposed to be waste time, but actually we not waste it anything really. You're very efficient, you always coming early, and you plan well, and you have abnormal gain. Yes, instead of loss you have a gain more than. So that's, so we can look around input cost and divided by expected output. So which will go through example here. Here in this example, we can look around. We have a cost incurred 4,500 for 1,000 units, and there is a cost of £5 per unit. If we think there is a loss of 10% of those inputs, so there is 100 units the loss. But in actual output, which we have finished goods, we have 850. So in the nutshell, we have a loss of 150 units. 100 we were expecting, which we embedded because we said the output should be, cost is a 45, output should be 900 from this input. So overall cost will be 5. But when we actually, the output wasn't 900, it was 850. And the cost of 850, yes, if we multiply with it 5, so we can find the cost of it. Yes, so that's, and that's 50 times 5, that is 250, which we have abnormal loss in that case. And we can make, it's like a account, yes, abnormal loss. So in process account 50 unit 250, that here is in abnormal loss count is the credit side, but in actually profit and loss will goes on the debit side because it's a loss. Okay, that's the way we can look around finished good. It can be abnormal gain, abnormal loss, and we can prepare. But the normal loss, the scrap unit, still if there is a scrap unit, we can sell it, we can recover some money out of it. Sometimes things are little. Maybe we're not selling £5, we can sell it less than £5. Because the cost will be reduced by 4,500 minus 40, which we can recover through scrap. So our cost will go down from 5 to 4.955. Yes, that will affect all other costing and we will be well off. So that's each process we can prepare this. We can look around each process, how many percent that unit is complete, and how much is closing inventories of each process. Inventory, 3 types: raw material, finished goods, and this way we can calculate, these accounts. Any question?
I'll probably have to read it all through to get my head around this properly.
Right. Yes. So what we need to, just a simple concept we need to keep in mind is a process. Yes. Process 1 finish, process 2 start. Yes. Maybe if we are making, let's say we're making cars. Yes, we have a parts, we have a doors, we have a different. So each process we're looking separate cost for it. Yeah. Each we have a budget, and then we can say which process we have a loss. Yes. Or which process, so we can review it, basically looking management point of view. Yes, where we can identify where the loss, why is the loss. This is all purpose of costing, to look around and make the decision how we can reduce it.
Okay, yeah.
So this is all, of course, it's all the information. So you follow the steps. Step 1. So thus you can look around the process costing, and that's okay. Then we have in 3.3, make suggestion of improved performance and monitoring. How we can improve? First of all, always look around the trend analysis. One, we can use the time series. I'm not sure because we learn about moving averages or trends. Yes, that's really help us. We follow the trend, and then you can look around why we are not according to the trend. Yes, so we can improve. So here we can look around. We've been given the sales. Yes.
Yeah.
And then we are looking moving average. If we are looking moving average of 3, so we add 3 figures and divide it by 3. 390, 380, 4, yes, 60. Divided by 3, we'll get 1230, yes. And then we can leave first one and we'll add next 3 and divide it by 3. So then if you look in between that, if we add them, So if you look 1230 divided by 3 now, that will come 410. So we can find in these months, we have a trend of moving 410 units. Yeah, like sale trend, cost trends, and then we can make the decision based on. Okay, so this is some example here. Okay, uh, this we can use it like, what is the actual, what is the trend, what is the actual cost, and what is the trend. Trend was 92.7. Actually, we have 80. So there is a seasonal variation 12. Because if we look the sales not always consistent. In different months, we have a different trends. Yes, different seasonal variation. That we can also keep in mind when we'll make the budget. These are all the examples, actual and seasonal variations. Any question on this around? Maybe there are figures, huh? So just a matter of going through, or any other example we can add it. We're not really restrict to this, huh? So I'll send you the booklet, and in the book we have a chapter as well, huh? We want
Oh,
to be,
yeah.
so that's step by step approach, because sometime maybe. Okay, time series help to forecast like retail price index. So what is the current value of the sales in it this year? What is the actual sales in the year? Time, if we want to be find the index of it, current price index divided by the retail price index for year Y or the next year. Current period divided by the base period. So we can find it what is the index, is a 100 index increase or so on. So if they here is an example, then other is we can learn about the linear. Linear is we know the correlation. Yes, we know about correlation.
I don't think so, no.
It's called relationship. Yes.
Okay.
So like if we think about weather and ice cream sales, is there any correlation?
Well, yeah, there will be, yes.
If it's a hot weather, ice cream sale will go. Yes. So we can find the trend and we can say, is there any relationship between it? Yes.
Uh-huh.
So this help us to be achieve our objective effectively, and we can look around, we can plan things like here apply the regression. How if there is a no relationship, it's called scattered diagram. Maybe in maths we learn about, yes, how scattered we are. There is a no, like when COVID-19 cases, they are saying there is a relationship. Yeah, lockdown is and the coronavirus cases. Yes,
Mm-hmm.
if there are people not wearing, so we can say there is a relationship. If that's not really, in some area it's do and some area don't, maybe we'll say it's very scattered. Yes, and we can find the scattered diagram, huh? Which normally in the graph we can show these things, huh? So this is all about forecasting. So normally what we do, we can say y is equal to a. A we can say is a fixed cost, b is a 1 unit variable cost, and x is number of units. Yes, if your number of units increase, variable cost per unit, total variable cost will increase. So like here, yes, we've been given, and then we all put it 300 times 9. Yes, and we look around the total cost. If those anything variable or the number of units increase or decrease, that will affect you. Yes, if the seasonal variation in quarter 9 for suppose there is a forecast of the sales, so we can look around in seasonal 9 what is why this is happening. So this way we can look around the forecast. I have a document where I can send you, yeah, if you want to explore it. So I'll give you all. This is called seasonal variation trends. We have a separate chapter on it. Okay, I can.
Yeah, please do, yeah.
Because that's quite good, the concept really look around. Basically, if you're preparing the management accounts, yes,
Uh-huh.
and in management accounts, it's good to be you can give the trend to your clients, huh?
Okay.
So I'll send you this booklet, and we have a chapter on this. It's called, and sorry, it's opening just in a minute. Okay, so I can show you the chapter number which we are referring to. So we can look around in this, and okay, in this book. So it's different 2 units. It's the same thing we teach. Budgeting and looking. Okay, this I'll send you in a seasonal variation. We have slide, we have questions, and we have in a book as well. Why not? Is which chapter they mix up? Then I'll give the full title of it. Should okay. It's a wrong handout. That's why saved in the wrong file. So this is MCD book, mark book. Okay, sorry, I'm just try to refer, you exactly, the page. Hello, welcome.
Oh, hello.
You okay, huh?
Yeah, I'm fine, thanks. I was really worried about what happened. Like, I was waiting for, like...
No, no. Everything is fine. Just I want to refer one thing, which is I'm struggling to locate at the moment, which is further forecasting introduction, variance. This is forecasting. Okay, this one. So just one. I'll exactly, I'll refer you the handout. Huh? So you can practice if you. It's quite good concept really. We teach in ACC as well, which is F7, F5,
Okay.
and normally we refer F7 as well. These papers, and those we look the trend analysis. You will see this is time series. You see the question, huh?
Yeah.
And we can find from time series we use the trend, like moving averages we want. So this is a 4 moving averages. You're adding 4 figures and divided by 4. Then you're finding the midpoint, and then you're looking the how much is variation from previous period. Huh? All these there will be 2 handout. One is the question, one is the answer, huh? Where we can look around, and I'll send you a separate booklet as well. Okay, so you will see here all being these questions being solved. Yes, like here moving averages. You're adding, if it's a 3, you're adding 3. If it can be moving averages, then you're looking the difference between two figures. Yes, you're finding the how much is the variation. Huh? Some period there is a no, because if you look there 5 and 5, yes, and 5 and 4, so there is a variation. One positive, one negative. Maybe one period your sale go up, one period go down. Huh? Yes. Then central averages we have, you can find it in the middle. So you can 4 years, like now we are finding this in the middle, and then we finding the seasonal variation. Huh? So it's good to be look around these questions. And then we have quarter 1, quarter 2, quarter 3. Always we are hearing in the news. Huh? Like here is seasonal is an example of ice cream sales. Huh? So if we look here, we have a quarter. We've been given one quarter is negative trend, one quarter is a positive trend. Yes, previous quarters, huh? Previous years. So we can look around. Even we can use in Excel formulas as well to calculate. Huh? 9 times 1. Here we've been given increase by 1. Yes, in quarter. So now in the ninth, if we are the ninth quarter we are in. Yes, they are saying in the following year, 20. So, and we're looking 25. So how many quarters we have? Yes, until that. So we have 20x3, we have a 20x4. Yes, we're doing 20x5. So every year we have a 4 quarters. So we are looking the figure of quarter 9, huh? In the year 5. If it's a 1 increase, so their trend will be 59 now, huh? Then 60. So then we look the seasonal variation. If the 70% drop from minus trend, so 59 was, yes, forecast, but the seasonal this season will be only 17.5, huh? And other will be plus 40. So you plus it in forecast, seasonal variation will be. So that's the way we can look around this, huh? Which is quite good. Then we have an index number. Yes, current years divided by the base year is the formula. It's good to look around. If you want to go through, please just hand out. And then we have a separate handout for regression and correlations as well. That's also, yes, here we've been given some example. We'll see here. We've been given y is equal to 13,000. This is we learn in maybe little statistic in maths, GCSE A levels as well, correlation. Hope so we'll learn. Okay,
Yes.
so this is all about correlation, regression, mean, mode, averages. So that's, we've been given the units, we've been given the y is equal to, this is the fixed cost, this is the variable cost, and x represents how many units we produce and sell. So then you can multiply and we can calculate. So we can look around the forecast. Yes. So if we January 5400 times 0.48, yes, plus 13,000, that give us total value. Huh? Yes. And then that production, and we can find the cost. Huh? That's the way we just multiply by using the equation, and we can do similar. So please, in your time, if you want to explore it, you can. It's not compulsory to. If you don't like, but it's good to be if you're producing management accounts, so that will help you to further enhance understanding. Okay, let's say we move back to the lesson we was in. Okay, that's the way we can look around all these regressions, correlations, and based on it, we can make the decision. Next, we have next 3.4. We have performance. Okay, when you measure the performance someone in an organization, performance always equal to 3 things, please. Performance equal to cost, time, and quality. Never measure just on the cost. Because if you don't have a quality, what will be happen in the long run? Any question here? Okay, we need information internally, externally. In the management, we can make the decision. Okay, so when we look management and the performance, maybe you can look around qualitative and quantitative. Qualitative is more good and bad, yes, satisfaction, and quantitative more you're looking numbers, huh? Objective. So that's performance always can be linked. Okay. Then the performance measures, maybe you can look around the capacity ratios, how much we have a capacity, how much we have a efficiency ratio, how much activity ratio. If you know the capacity ratio, how much was the capacity, how efficient, how many, like in the hotel we have a room, 80 rooms, 100 rooms, 60 rooms book. Yeah. So capacity was 100 room, yeah. How much capacity you have used it, yes. What you generate it, how efficient you are to generate it. Is there any variance, actual and budgeted figures? Huh? So that's we can gross profit margin. Always good to be like in ratios. Always look the measure the performance. What's happened gross? What is the gross profit? Sales revenue, sales minus
Yeah.
cost of sales
Cost of sales.
equal to gross profit (GP). Yeah. So
Yeah.
this is cost of sales is a direct cost, yes, or we call variable cost. And sales minus cost of sales give you gross profit. You can say what your target cost was and what your target profit. You want to be on 23% at least or 50% at least. But this is not your profit. Then you minus your overheads, yes? Or we call indirect expenses. You will get now profit for the year. It can be in financial account before tax, after tax. Huh?
Yeah.
Okay. So that's the way we can look around and we'll measure the performance of last year, this year, what's happened. Huh? Why this happened? Is it cost went up? Why this went up? Because the new tax on the borders is being introduced. Huh? This is affecting because we're looking management accounts. Huh? So you can give your then other can be return on capital employed. Maybe we can look around how much asset we implied and what return you have. We can look around the profit for the tax, before tax, after tax, asset turnover ratios. We can liquidity ratios. Yes, how current asset minus current liability or current asset divided by current liabilities, working capital cycle, which we discussed in the unit, gearing ratios, high gear, high risk. Yes, and these further. If you basically these are all we are doing for the sake of to meet the criteria. If you're adding any examples, we will meet. Then we have a model is called balance scorecard. BSC, balance scorecard. Yes, this model, when you measure the performance, don't measure it one. You look in the financial perspective, you look in the customer perspective, you look in internal perspective, you look in innovation. Yeah, have we bring anything, and then you look, and these are the criteria you can measure it against. Yeah. Like if you look in financial perspective, of course, you can use the financial ratio. If you look in the customer perspective, you can think the speed of delivery, how quick, the customer loyalty, yes, how many repeat customer is buying from us. If you're looking internally, you look around total quality management, we will call production, yes, how many times we have, training costs, how much we have, what's happened reports, is it efficiencies improve or not. That's how you can measure the performance. Innovation and learning, revenue from the new products percentage, how many, research and development, how much money we spend, how much we are doing, something known as internal business perspective, and learning perspective. That's all we can. So that's all today. This all was not was about learning the performance. Okay, like we did. Any questions?
Yeah, no.
But everything, whatever we discuss, we need to keep in mind our major learning outcome, internal and external, internal information and external factor, huh? Which is called microenvironment. Okay, so
Okay, yeah.
that's all today. And if you have any question, you can ask me. Those are online. If you're listening to this recording and at any point you're not get me, please drop me an email and I'll try my best to get to you as soon as possible. Thanks for listening to this. And next lesson will go to. Thank you. Bye-bye.
But